Hello and welcome to this episode of MacroSutra. I'm TCA Sharad Raghavan, Deputy Editor, and now we know that the rupee has been falling, and we also know that the RBI has been stepping in to protect the rupee, to prevent its fall, or to at least slow it down. But what is the outlook ahead? What are the various factors that are causing the rupee to fall? And are these factors likely to linger for the few months ahead? This is what we're going to discuss in this episode of MacroSutra. And to discuss all of that, we have with you Radhika Pandey, Associate Professor at NIPFP. Thank you so much, Radhika, for joining
Thank you,
us.
Sharad.
But now, before we start, I had an appeal to make before you, which is please do subscribe to The Print. It allows us to do the kind of ground reporting, the kind of discussions, the kind of analysis that you've all come to love about The Print. It allows us to do all of that. But apart from that, it also gets you several benefits. One is that you get access to our newsletters that our editors write, and they come straight to your mailboxes about the news of the day, the ones that the editors think are important. Apart from that, you get access to subscriber exclusive Ask Me Anything sessions where our reporters and our editors answer all of the questions that you have for them on any given news topic, and they do this live. So you can ask them questions live as well. But apart from that, you also get to write into us on in our Your Turn section. Your opinion is published as an article on The Print. So there's a lot for you as well, and of course there's a lot for us. So please do subscribe. But let's get back to the discussion now. So now, Radhika, we know that the rupee has been falling, and that there are several reasons to this. So let's go over the reasons one by one. The first is not something that's happening in India, but something that's happening in the US.
Right.
The US macroeconomic data is causing the rupee to fall against the dollar. So could you explain what's been happening there and how it's impacting us?
So we've been talking about the uncertainty in the U.S. economy, the anticipated policies of the incoming Trump administration having a likely impact on the rupee, on the markets, and so on. But in addition to that, early this week there were fresh triggers for rupee fall, and they are related to the U.S. macro data, in particular the U.S. labor market data. Why it is important is because labor market data is looked at by the U.S. Federal Reserve when
Right.
they decide their interest rate policies, whether they have to cut interest rates or not. So, two sets of labor market data. One is related to the non-farm payroll employment. It showed that the increase in the U.S. non-farm payroll employment was 256,000. Which is in November, it was 212,000. So this is 1 month increase. And this was more than what was expected for the month of December.
Right.
And also the unemployment rate came in lower at 4.1. It was expected at 4.2. So these two labor market data gave the indications that maybe going forward, the possibility of interest rate cuts by the US Fed would be diminished. And if the interest rate cuts the possibility gets diminished, then the risk adjusted return on rupee denominated assets get lower because the US is not cutting rates. So therefore the differential is not too much, and therefore the incentives to remain invested in Indian denominated assets also gets lower. So
Right.
that
It's
was one
only if the differential is high, would it be worth investing
worth
in
investing
India versus the US?
versus the US,
Yeah.
particularly when there are exchange rate risks, given that US dollar is a reserve currency and so on. So that was one main trigger for in early this week when the rupee experienced a sharp slide due to the better than expected labor market data, which resulted in higher US bond yields and higher dollar index. Dollar index is a gauge of dollar against six major currencies with which the US has major trade.
Right.
So the dollar index went up, the other currencies sharply fell, and that had an impact on the rupee also. Rupee also experienced one of the sharpest slides in almost 2 years on Monday. We saw 2 days back. So that was one major reason. The other is also that inflation data came out yesterday for the US, and it's showing 2.9% year on year growth, which is higher than expected. Again, giving the possibility that going forward, could be interest rate cuts, but they would be not very aggressive. They would be shallower. The other also important reason is the uncertainty in the US, and that is getting reflected in their term premium. The US 10-year, interestingly, this is a very important data point, that the 10-year bond yields in the US have risen much sharper than the 2-year bond yields.
Okay.
Which means that if I have to park money in a 10-year bond yield for a longer duration, I want higher interest rate, because I don't know what's in store for the US economy, what's in store for the markets, what's in store for the monetary policy going forward. So it's not just the 2-year bond yield which is more sensitive to the interest rate decisions of the Fed, but more importantly, it is the 10-year bond yield which is showing a sharp surge post the US presidential election. And therefore, the spread between the 10-year and the 2-year bond, which is also called the term premium, the difference between the long-term bond yield and the short-term bond yield, that has risen. So a confluence of number of factors, the uncertainty, better than expected US macro data, all these are putting pressure on the Indian currency.
Right, and this is an important point, because I mean there's a lot of discussion around the rupee right now, and a lot of people, of course, are blaming the government, blaming the RBI, blaming domestic factors. But it's important to know that there's a lot of external factors at play as well, and these are significant factors. So, speaking of external factors, the second thing that happened was that the US has imposed fresh
Right.
restrictions and sanctions on Russian oil companies.
Right.
So now, how does that affect us and the rupee?
Yeah, so and this is very comprehensive set of sanctions that they have imposed across the entire supply chain of crude oil. Not only so, they have imposed sanctions on the major Russian oil producers, on the vessels that ship oil from Russia to other countries, including India, and also on the insurers, the companies that provide insurance for the transportation of oil. So across the supply chain, fresh sanctions have been imposed, and that has resulted in a again spike in the global crude oil prices. Because if we look at the last 2 months of 2024, oil prices were relatively stable at around $75 per barrel.
Right.
And even the projections coming in from the World Bank commodity outlook report was that 2025 would be a benign year for global crude oil prices. But because of this fresh shock, the oil prices have surged to more than $80 per barrel. Now, if there is a disruption in Russian oil, it impacts India in particular, because over the last 3 years, Russia has become our biggest exporter of oil. We are importing almost, if we look at the current year, April to November of FY25, of our total oil imports, almost more than 38% of oil is imported from Russia, and that too at a discounted price. So now for the short term, there won't be any disruption because the supplies already would be in transit. But going forward, oil refiners would have to look for alternative sources of supply. They would have to look at other countries, they would have to look at Middle East, other countries, and there we would not get oil at the discount at a discounted price that we were getting in Russia. And this has, again, because we are importing 80% of our oil requirements, it would have implications for current account deficit.
Absolutely.
It will have implications for inflation and for the rupee, because if the current account deficit widens, it again is a headwind for the rupee, external value of the rupee. Rupee could depreciate, and more importantly, it could again lead to concerns around imported inflation. So all these reasons, again, so one was the US macro data, the other was the fresh sanctions, and these two factors together have led to a sharp slide in the rupee.
But it's not just that, right? There's also things that China is doing that are affecting, India. China has been, so it also saw a depreciation of its currency, and the Chinese central bank stepped in to try to, stem it or slow it down. So how does that affect us now?
So actually what China did was that China allowed its currency to depreciate. because
Oh,
it
I
was,
see. They allowed it.
yes,
Right.
yes. So it was fixed at, if you look at the exchange rate of yuan per dollar, we see that it was fixed at, it was hovering around 7.3 against the dollar.
Mhm.
On 3rd of January, it allowed the yuan to depreciate a bit. So it has now surged past the crucial 7.3 against the dollar, and it's now, it is more than that. So in other words, to some extent, yuan has depreciated against the dollar, and now the Chinese central bank, the People's Bank of China, is taking aggressive steps to defend yuan because it's already crossed the 7.3 per dollar, and this has implications again for India, because if Chinese goods turn more competitive because
Yeah.
yuan becomes cheaper, it has implications for our imports. Chinese goods turn more cheaper, Indian goods competitiveness get eroded, and all sorts of impact on trade deficit would get aggravated due to that. So Chinese currency moves is again something which need to be watched out, and Chinese currency moves are again in response to what the US
The
will do
US
to
is,
them.
yes,
What
exactly.
sanctions, what will be the response once the post the inauguration of Donald Trump on 20th of January, how the relation plays out. So their currency moves will be dependent on that, and therefore it will have a ripple effect on Indian markets and Indian currency.
Absolutely. And just to put it in a nutshell, if Donald Trump comes and he imposes tariffs on China, then China is going to want to make its exports more competitive, make it cheaper.
Right.
And so it will allow its currency to depreciate. And this is a big problem for the major importing countries from China, which India is a big one.
Yeah,
Uh,
and it will also reroute its exports to other markets from the
Absolutely.
US to other markets, which
Yeah.
will again be problematic for India.
For India. No, so now, okay, so coming to India, we've talked about now the US, Russia, and China, but coming to factors in India, the foreign institutional investors have been consistently selling in
Right.
India. They've been pulling their money out. So, do you feel that they will continue to sell, and then will this continue to exert pressure on the rupee and again cause further depreciation?
Yes, so we've seen that from the last 2 weeks of December and the first 2 weeks of January, FPIs have been net sellers of Indian equities. And particularly for the week ending 10th of January, they sold more than $2,000 million worth of equities.
Right.
And even on the 14th and 15th of January, their sales of Indian equities have been quite large in terms of value. And again, it is driven by the fact that US assets have become more lucrative, and
Mm.
therefore, if they try to stick in India, their profits would get eroded because US has become more valuable. It has appreciated against the rupee. So in rupee terms, their profits get eroded. So it's better
Right.
for them to exit. So in the short term, at least, because of all these factors, because of the pressure on the rupee, there is likelihood that FPIs would be net sellers. And again, one another important external development has been what is happening in Japan, because Japan has signaled recently that it's going to raise its interest rate.
Right.
Last year, we did an episode on Bank of Japan's interest rate hike, how they have transformed from a negative and zero interest rate policy to a positive interest rate
Mhm.
policy. Now, in Japan, also the wholesale price inflation has been rising upwards, and they have signaled that they will, 2025, they will initiate a series of rate hikes, and the first meeting is scheduled next week. So again, that will have an impact, because if Bank of Japan raises its interest rate, the Japanese bond yields would rise, and those Japanese investors who have not invested in Japan but invested in other countries, including India, because in Japan the yields were very low, they would again redirect their investments back to Japan.
Right.
So
Of
there are
course.
these various challenges. There are these various sources of risk, and we do not know how these will play out over the next couple of months. But what is important and notable is to see that VIX, which is the stock market
The
indicator of
volatility.
volatility,
Right.
it has been showing sharp swings because of these factors. The domestic factor being the subdued growth and uncertainty about what's going to happen to the third quarter earnings, but more importantly because of the global uncertainty and the sanctions on the Russian oil and the US economy.
Wow. So there's clearly a lot happening. And in all of this, the RBI has stepped in to defend the rupee. And we know that, say, over the last 3-4 months, it's sold about $70 billion worth of reserves
Right,
just to shore up the rupee.
right,
But now we have a new governor.
right.
So, do you feel that, and going by his statements, I mean, do you think that that he's going to follow the same policy, or is he going to tweak it a bit?
I think he's going to tweak it a bit because the data shows that. Because if
Mm.
we look at the rupee dollar exchange rate, what has happened is that since he has become the governor, we have seen the pace of rupee depreciation has been much more. There was
Right.
a period before during the tenure of Mr. Das when the rupee was more or less stable because there was aggressive intervention in both the stock market as well as in the forwards market,
Right.
which saw the depletion of foreign exchange reserves and the domestic banking sector liquidity getting tighter and tighter.
Hmm.
So I think now there is a change of stance because they do realize that beyond a point it's not useful to keep intervening in the market on a regular basis. If there are these very sharp swings and volatility, then of course the RBI will intervene. But on a regular basis, it's not based on the data. We can say that RBI may not be intervening that aggressively, and I think that's an appropriate strategy because what happens is that if the rupee is kept stable for quite some time, it introduces a false sense of safety amongst the companies who are engaging in foreign borrowing.
Correct.
They
Right.
think that the rupee will remain stable and they do not have the incentive to hedge.
Hmm.
Now, what is happening is that now that the rupee has turned bearish, hedging costs have also soared as high since 2022. So all these things now it's even become more expensive now because the RBI is not intervening, and suddenly now there is a bout of rupee volatility, bearishness. So now even the hedging costs have soared. So all these things need to be kept in mind, and also there was a period. There is some scope for rupee depreciation as well because in the last 2 months of December, we saw that the dollar index appreciated by 4%, rupee depreciated by 2%.
By two. So there is still more.
There is still
Yeah.
catch up to be done on the rupee depreciation. And also, we talk about rupee depreciation boosting export competitiveness and so on. But if the other currencies are depreciating much more than India's,
Mhm.
then the benefit is eroded, it's
Correct.
lost.
They become
So
more
they
competitive.
become more competitive. So
Right.
all these things need to be kept in mind that beyond a point, it's not very proper to keep keep a tight grip over the rupee, particularly because it is having an impact on the liquidity situation. It has turned deficit, and just yesterday the RBI has now announced variable rate repo auction, which is
Yes.
to infuse more liquidity, and that is going to do daily, which shows that there is a problem with regards to liquidity at a time when growth is slowing down. So I think all these considerations have made them change their stance from aggressive intervention to allowing the rupee to weaken a bit.
Okay, so that's at least good. That at least they're being more flexible.
Right.
But there you go. So that's what's happening with the rupee. It's a global phenomenon that is affecting our currency. Things are happening in the US, Russia, China, Japan, and I mean, of course, the global uncertainty around the wars and everything that all has a part to play. And further, within India, growth is slowing, and corporate performance hasn't been that strong. So investors are kind of jittery. They are ready to take their money out as soon as the US or some other economies start looking more attractive. So all of this is playing its part in seeing the rupee depreciate. The RBI, of course, has been defending the rupee so far, but it seems to be moving to a more flexible stance and being like, okay, let it depreciate a little more. before we intervene, if we intervene at all. So that we feel is a good thing. But on that note, that's all from us. Thank you so much for watching.